Acomaldo Crypto here. Okay, guys, hi there. So this is my second update for today's Bitcoin chart. I have proposed this expanded flat, right? But this is wrong. This can't be happening because we haven't broken this A level here. We haven't broke that resistance that I have said of 6850. So this is invalid. Okay, this can't be happening. Okay, so let's pay attention. Let's look at the chart and see what we have. What we have is this wedge. Okay, and we see something like a 1, 2, 3, 4, 5 information here. Okay, perhaps it's not, it has finished, but I think it's still, we have one leg more down. Okay, perhaps a truncated fifth. Okay, this is the structure. Okay, this is the expanded flat. It's a corrective pattern, but it's invalidate. We can't. This is, if you count this as an A, B, okay. It's at a lower level of the initial point of A, but C is not a higher high, so we can't have an expanded flat. Okay, that's it. And as I said yesterday, this was pretty clear that it would broken. Yeah, that this would go down. This was a easy call. Okay, a lot of analysts spot the same. And then we have this 1, 2, 3, 4, 5. So we can't. What's the problem here is that here I see an A, B, C, A, B, C. I see this A, B, C, A, B, C. Okay, so yes, so we can have a leading diagonal. Okay, that is in a corrective pattern. That is like this. Let me just mark it here. This is an A. This would need to put a B here, and then we would go up. Okay. This is also, this can be a running flat. If it's a running flat, we wouldn't challenge this level of A again. We wouldn't break this level here, and we would go down. What that means is that we are correcting this movement here. So here is our 5. Okay, here's our 3. I need, actually this was the count that I had presented weeks before, because this price action here looks like a 4. It looks like pretty well a 4, and this is the region that we have tried to break and we have failed, as it's acting as a really strong resistance. This is our 3 and our 5. We finished this wave down, this motive wave down, and now we are correcting. Okay, we are correcting this wave down. Here we have a similar pattern. Okay, here we have this pattern. Here we have a really similar pattern here. Okay, the same pattern almost. Yeah, this one took more time, and it was a elongated pattern, but this one looks a lot like this one. Yes, it's the fractal nature of stock markets. I would like to put this one here. This would be my 2. Let me take this. This would be my 0. Okay. 1, 2. Yes. Okay. Okay. I don't need to measure it. I just by the geometry of the chart, it's looked pretty well, right? It's looked like it's okay. Okay, so we see this wedge here. The same thing happened as happened yesterday. Okay, this is what I'm saying. Of course, one may say, oh, it's not exactly the same thing. No, but it's similar. So I am implying that we are gonna have a strong wave down like this. We might, okay, we might put a motive 1 here, 2, 3, 4, 5, but this would mean that we would have a nasty bearish movement down like to 4K. Okay, I don't think this is gonna happen, not yet. I think that we are correcting this movement here. So we have an A, B, C. Okay, this A here should be like here. So this is a problem, right? Because we A, B, C must, but we can allow to in a running flat. Okay, this would be like this. So a leading diag in a corrective wave, in the first wave A, we can have an A, B, C for wave 1. Okay, this is within the rules. If you go and look for it, this is okay. 1, 2, this is our 3, 4, and 5. Okay, perfect. We have here our, okay, one might say, but we have in theory we should have this 5 here touching this top line of the wedge, but we haven't. Yes, theory is not always. Just let me wipe this line here because I drawn it yesterday. I said that we would have this week yesterday, so we had. Yes, I saw the price declining. Let me just change this color, greenish, something greenish. Let me put yellow. No, let me. Some micro, just because I don't know what's going on yet. So when we have a leading diag in a wave A corrective, we have 3, 3, 3, 3. Okay, that means that we have ABC 1, ABC 2, ABC 3, ABC 4, ABC 5. Okay, this is a different pattern. Okay, this is way different than we are accustomed to. Yes, that wave 1 we should have this is a ABC, then I want to have again an ABC correcting this wave 2. Okay, A, B, C, then A, B, C again. I don't know, guys. For me it's really clear that we have something like this, don't we? A, B, and C. Okay, it's divided by trees inside trees. Okay, trees inside trees, and A. Here we have an ABC really squeezed. Right? Let me here A, B, and C. And our final ABC needs to be like this, like really short. A, B, C. Okay. Here we have, this is our leading diag to a corrective A. Okay. In a corrective A, we can have 3, 3, 3, 3, and 3. 1, 3, 3, 3, 3, and 3. Now we are correcting our wave A. Yes, we are correcting this wave A. We have our 1, 2, 3, 4, 5, A, B, C. Okay. So, are we going down? Yes, definitely. How much? I don't think. I think we are going to correct to some level like the previous wave 1, right? Here's a nice region. Okay, we need, but we don't have. We might have a B wave that's way that takes more time to correct, right? Now that I explained this, let me take this out because it's a lot of marks and it's pretty confusing, huh? This is 1, 2, 3, 4, 5. It's clear, no? We are, and it's clear that we are yet to put one wave down, but I don't think it's gonna be. We have here a 1, an extended 3. We want to have an extended 5, of course not. We can't have an extended 5, and we're gonna have something. We're gonna test this 3820. By the way, this Fibonacci retracement here is from the bottom to the highest point here, okay? To the highest that I labeled as A. Okay, this is one alternative count, guys, okay? I am not sure if this is going to happen. We have to put up here a 1, 2, 3, 4, 5 here in our C, an ABC here, and then this is gonna take a while. This is gonna be something like this. It's a flat. Then I don't want to take this out here because I presented this scenario and it was wrong. So I need to remember that I did something that was not okay, right? This pattern is a beautiful pattern. I was really hoping for it to be happening, and it's not happening. Okay, this is way better, right? It makes a lot of more sense because we have this edge here. Now we have this wedge again here, and this is a leading diag, but it's a leading diag composed of threes, okay, 3, 3, 3, and 3. It's different. Then we have an ABC here. We need to, first of all, we need to see if you are going to break this level here of 6180, 65, okay. One might say, but why I think this is so interesting, okay? Why? Because a lot of people is going to think that this is a 1, 2, and then a 3, okay? And that's what the market, that's what the people that is analyzing and okay, let's face it, it's a war between different people, yeah. And if they want you to think that this is a 2 and this is going to be a 3, so you're gonna to load really hard here. Are you following me? You're gonna load really hard here to get this wave 3, which is often, and it's the most likely to be the extended wave, to get like, oh, we are out of the correction, hooray. Okay, but this is what happened. We might have a truncated C, it's a running flat. We might not even break this resistance. We might see the end of the year without breaking this resistance, guys, this 6800, okay? And we might go down again, but it's gonna take it's gonna take some time. Remember, if we need to see those ups and downs. If we want to see this, if we see this C breaking wave A, okay, it's going to be 123%. Okay, this is the extension that we often see. So if we put here our wave B, if it goes to 65%, for instance, here we have it, 127%, 20. 7,400. Yes, not bad at all. Okay, this is a good spot. Why don't think about it, right? Okay, 1, 2, 3, 4, 5. We would think this is impulsive, okay, but then we would crash. Okay, this is one scenario. This is possible. Okay, this is possible. One thing that we need to bear in mind though is that we have a possibility that, okay, once we broke this region here the algos and the people just turn themselves really bullish, and the market spikes up, and we don't see this scenario here breaking down here. Okay, this is my scenario here, right? That it's not playing out. This is my bullish scenario. Yeah, this is not a 4. This can't be a 4. Okay, actually this bullish scenario here is out of the table. Why? This is not a 4. That's simple. This is not a 4. This makes Elliott wave wise, this makes a lot of more sense, and it's the price action is a lot more consistent. Okay, this is what I would have played. Okay, I shorted here. This is you don't need to be a Elliott wave analyst or whatever to short here, because you see that the buyers is the buyers is getting weaker and weaker. We are just getting rejection, so you short here. It's pretty easy money. And so we need to wait to see after we put this last wave here. Okay, we need to pay attention if you're going to retrace 50% of this wave here, and then we're gonna have one more leg down. Okay, we could have a double bottom here. Okay, so imagine that we put 5 waves down, one wave up. Okay, something like this. This is our A. Okay, B 50%. It's like here, and a C. Okay, something like this. We might not even this wave 5 being really truncated. Let's assume that. Okay, that a lot of analysts are saying 6100. I agree, 6100 is also a really strong support. We see here wave 3. Okay, wave 1, this wave 5, we broke it. We broke this resistance, but we went up, and it's now acting as, you see a lot of cluster here. If you go back in the past, we see that this is a really strong area. Okay, and it's now acting as support. Okay, so 6100. Okay, if we bounce, we might have a double bottom here. Okay, something like this, 6100, and then we would have this wave C, 1 2 3 4 5. Why not? I would like to see reason why not. Okay, that's how we need to trade, right? I am reacting. The market is reacting. I'm reacting together. I'm not saying, hey, I hold the truth. This is the count. I am the best analyst. No. No one is. No one. Okay? Sorry. No one is. Perhaps a double bottom here. We are talking about probabilities here. Yes, and then, I'm sure a double bottom would put a lot of confidence back, and then we would have the C, and then we would have one last wave. One last wave. Okay, think about it as a really far-fetched prediction. Oh, the last wave, the last 5 waves down, a diagonal, finishing it. But who knows? Okay, remember I said this in previous video, we are in a bearish market. Okay, see, here we have the 200 EMA, 100 EMA, 55 EMA, 21 EMA. Okay, an engulfing bearish candle here. Okay, that we broke this 21 EMA that has acted as support. Okay, I know I have presented a bullish scenario. Okay, if we look at the weekly chart, monthly chart, I know we don't have data enough to have other EMAs. We just have data enough for the 21 EMA, and we are just sitting on top of the 21 EMA, as you can see here, and we have a doji. This is the week. This is the monthly chart. This is the correction. Okay, this is the 21 EMA. We traced a lot. If you think about, of course we traced a lot, but the 21 EMA is just acting here as a support. This is the monthly chart. If we break down below, as we were here it was 2014. Yes, we were below the 21 EMA, and then since 2015 we are above it, and now we are just we hit the 21 EMA and we react. Okay, this is the monthly chart. What about the weekly chart? Below the 21 EMA, below the 55 EMA, now trying to touch the 100. Okay, but not really yet. We haven't touched it. We haven't touched it yet. Okay, this is the 100, so it's acting as support. We are pretty much bullish, if we can say that, but of course this is a weekly chart. We are bullish in the if you consider that. In the daily chart we are bearish. Okay, we have this is the death cross here, and we are, as I said, we don't have the 21 EMA support, not any longer, not anymore, I'm sorry. Yes, here we are pretty much since the beginning of the year. This is February, right? No, this is May, I'm sorry. This is May, we are below the 21. This was the beginning of July. We were a little bit above it, but then we are down again. Okay, so this is the picture, right? This is the whole picture of this story here that we have, and we are like what? Correcting for 290 days. That's true. That's the right thing. Yes, we are correcting for 206 days in comparison to 1056 days of impulse wave. Okay, of a impulse movement, not an impulse wave, sorry. Okay, this is like roughly 18% of the time that we spent going up. So we have indeed to take into account bearish counts. We need to take into account bearish counts like these that takes a lot of time. Okay, that's here to appear like a bullish count, to deceive people that it's like a bullish count, but it's not really, and we are going down here. Okay, this is a wave 3. No, it's not a wave 3, we are going down. So bear in mind that, guys, that it might look like a bullish market. It might look like a motive 1, 2, and a motive 1. We are putting now a 2 and then a 3. I presented something like this, okay, because it's possible. But I don't know. I'm reacting to the market, and after this impulse wave 1, this is going to be a 1 wave here. Okay, 1, 2, 3, 4, 5. But I don't think if it's gonna be an impulse wave. I'm sorry. This is not. This might be an impulse 1, then a 2, 3, 4, 5. Then we would go down. It's possible. We need to break this channel here. But this B here is really, I'm inclined to discount here. Okay, sorry for discount here for this expanded flat. This is not possible because we don't have a C here that is that has broken this resistance here. We haven't broken, so we are within this we are yet to break this resistance. Okay, perhaps this C. We might have a running flat that don't break this C. Okay, so this is a corrective A, 3333. So we are to put an ABC, then a 1, 2, 3, 4, 5 C. Okay, If you have questions, guys, please leave comments. And thanks for watching again and again and again. Thanks so much for your support. Those are my social media. And if you like it, and subscribe. And as always, enjoy your trades, guys. Bye bye. See ya. Cheers.